dramatically short of metals and minerals. That's a big claim. Sometimes you might hear we're short on copper or zinc or some other oddball metal you've never heard of like lithium or antimony. But this is bigger than a quirky little shortage. We are short them all. And mining stocks are the companies that pull these commodities out of the ground. And this shortage is powering those stocks higher. So in the U.S., the Spider Metals and Mining Fund has rocketed from $50 to $100 per share this year alone. But this isn't going to be just a blip on the radar. There are 3 long-run reasons that these stocks are soaring. Those reasons are going to power earnings higher, and that's going to keep prices moving. So even with this move already, mining stocks are still cheaper than the broader market. And we've been waiting a long time for this move. Look at this chart of U.S. mining stocks again, a 0 return from 2010 to 2024. That's during an era of booming markets, low interest rates, and strong economic growth. As an investment, mining stocks had been left for dead. No one wanted to touch them, but now that's changing. And it actually leads to the first reason that mining is back. So, number 1, for decades, no one wanted to invest in mining. That left the industry short on capital, and therefore mining companies didn't invest in new projects. It takes a very long time to develop a mine. If you want zinc or iron today, you should have started working on it 10 or 20 years ago. And again, we're talking about all kinds of metals, but the best example here is copper. This chart here shows the number of major copper discoveries each year. And back in the 1990s, we discovered 10 or more new major copper deposits per year. Now it's dropped to 1 or even 0. And if you haven't noticed, we still use tons of copper, right? Consumption has only been growing, but the mines are getting older and they hold lower grade deposits, and eventually the holes go empty. And you could tell a similar story for all the metals. If you look at the top 40 global mining companies, they've only invested about $70 billion per year in capital expenditures for the last decade. Now, $70 billion sounds like a lot of money, but it's less than Americans spend on food delivery or lottery tickets. And that spending is supposed to grow the supply of metals we need for the global economy, and it's just not enough. So, put simply, we have a shortage because we haven't been spending to find new metal. And that brings me to number 2.